Hey everyone, Palantir reported fourth quarter and fiscal year 2023 earnings results that has sent the stock price soaring above 25% on the day following the announcement. Of course, I had recommended Palantir stock as a buy for 2024, so you're going to want to tune in to see. In this video, I'm going to update that recommendation. So you're going to want to tune in to see if I'm going to say that it's finally time to take profits, or if I think Palantir stock is still a buy, or if it's a hold. So I'm going to update you on that recommendation. I'm also going to review the latest quarterly earnings results. I'm going to highlight what were the good things, what were the things that sent the stock price up, and if there are any things to be concerned about in the current quarter, if investors are overlooking any risks or any factors that were not so great in the quarter. I'll let you know about that as well in this video. So let's jump in, let's take a look at the numbers.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, I mentioned Palantir stock up 25.3% as of this recording on the day following the earnings announcement. Investors truly appreciated what they saw in Palantir's numbers. So here are the actual numbers we have from Palantir. This is the latest quarterly earnings results, and you could see revenue jumped up to 608.3 million in the latest quarter. That was up from 508 million from the same quarter the prior year. And impressively, cost of revenue only increased by 4 million, up to 108 million, up from 104 million. I've been saying Palantir management has done an excellent job in keeping costs under control, while revenue have also increased. Specifically, the company has done an excellent job bringing down general and administrative expenses, my least favorite expense. These are categories, things like pay for management, things like the corporate jet, corporate offices, corporate events, things that don't really connect to sales, profits, cash flow. These are areas where I feel a lot of companies have waste, overspending, and luxury. I don't like to see increases here, and the fact that Palantir decreased spending in this category was excellent. If I was a Palantir stock investor, which I am not, I don't own Palantir stock. I recommend it as a buy because I think it offers investors a good risk versus return, but I don't own it myself. Research and development is an area I don't mind to see companies spend, and Palantir increased their spending in this category from 82 million to 109 million. Let me clarify what I mean by I don't mind to see companies spend, because there's a little star next to that statement. I don't mind to see companies spending on research and development if the company in question has proven that it's been spending effectively in research and development. So if I'm following a company that hasn't delivered innovation, that hasn't delivered a product from its research and development, then I don't want to see this company spending on research and development anymore. It's clear to me that over the years, you haven't been very good in developing products. Your spending in research has been wasteful, so stop doing it, right? But when there is a company like Palantir that has been exceptionally innovative, delivering products and services that customers are eager to receive, eager to pay for, and you could see that in their results in revenue growth and profit expansion, then these types of companies like Palantir, I want to see them spend on research and development because I'm seeing the results of that spending. This is turning out products and services that generate revenue and profit. This is a category I like to see increases in. All right, so all of that led to a jump in Palantir's income from operations, where it was negative 17.8 million in the same quarter the prior year. It was positive 65.794 million this year. A nice jump to be sure. In fact, Palantir did achieve profitability in each and every quarter in 2023. Like management said they would do. I also give credit to management when they say they're going to deliver profitability and follow through and deliver profitability. You'd be surprised to see how many management teams make these projections of, oh, we're going to do this or that. And then when it comes time to actually deliver the results, investors get excuses and stories instead of the actual results. So when companies like Palantir actually delivered these results, I give them credit for delivering on what they promised. Interest income is something I've been talking about for a little over a year now with Palantir. We're going to see in a little bit the company has over $3 billion in cash, and with interest rates being as high as they are right now, Palantir is benefiting because they generate strong interest income from that cash hoard. In the latest quarter, $44.5 million in interest income. That was nearly 4 times the $12 million they generated in the same quarter last year. And for the full year in 2023, they generated $132 million in interest income. That was up more than sixfold from the $20 million they generated the prior year. In fact, they generated more in interest income, $132 million in 2023, than they did in income from operations, just $119 million. So they more than doubled their income from operations in interest income. So higher interest rates turned into a good thing for Palantir stock investors. Initially, it was a bad thing because higher interest rates means investors are willing to pay a lower price to earnings valuation multiple for growth stocks like Palantir. So that brought down Palantir's valuation. But then the second order effect of that is that Palantir has been able to generate more profitability, more income from interest, and that's generating increasing profits for Palantir. So the second order income has been positive for Palantir, even though the first impact of higher interest rates brought down the stock valuation. I mentioned that Palantir has over $3 billion in cash and marketable securities. You can see $2.8 billion as of December 31st in marketable securities and over $800 million in cash and cash equivalents. That's over 3.6, near $3.7 billion of cash that's generating interest income. Right now, government bonds, super safe, theoretically risk-free U.S. government bonds, 3 months, 6 months terms, you can get over 5%. 5.2% in some cases. So Palantir can put their money in super safe government bonds, generating over 5.2%. So if you multiply that out, 3.7 billion as of December 31st by 5%, that means in 2024, if interest rates stay where they are, Palantir could generate again over 150 million in interest income if interest rates remain elevated like they are. So interest rates being higher is now a positive for Palantir stock investors. If interest rates move lower, like it's forecasted it will, the Federal Reserve has suggested they will lower interest rates 3 times in 2024. If interest rates move lower and Palantir's interest income decreases, at least Palantir stock investors will benefit theoretically from a higher price to earnings valuation. Usually they're inversely related. Lower interest rates result in higher valuation multiples. Higher interest rates result in lower valuation multiples. And the last metric I'll discuss is Palantir's cash flow from operations, which absolutely soared, more than tripled in 2023, up to $712 million, up from $223 million in 2022. This is an excellent time to have an increase in cash flow from operations because investors have become more focused on cash flow, on profits, and less interested in these unprofitable growth stocks as interest rates have increased and the cost of capital has increased. So, overall, to update my recommendation for Palantir stock, coming into this earnings report, I had Palantir stock rated as a buy. After these earnings results, I am keeping Palantir stock rated as a buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.